So, you sent over this document detailing all the recent trade action under President Trump. And honestly, it's a lot to process.
It really is.
It's kind of like trying to follow a chess game where someone keeps changing the rules mid-match.
Yeah,
right?
absolutely.
What we really want to do with this deep dive is to just get a really clear picture of what these moves are, why they're happening according to this source material that you sent, and what it could all mean for you and me, everyone listening.
I agree. I think this isn't just about headlines flashing across the screen, right?
Exactly.
These shifts we're seeing starting right after the inauguration on January 20th and running up to today, March 27th, are already creating ripples.
Right.
We're talking about actions involving some major players, the U.S., China.
Yeah, you named a bunch.
Even a specific situation brewing with Venezuela.
And the common thread, it seems like, is this renewed focus on tariffs, right?
Yeah.
It's like the administration is reaching for this particular tool more often and with more force than we've seen in a while. And it's not just abstract economics, right?
Exactly.
This could really hit your wallet, from the cost of everyday groceries to bigger purchases like cars.
Oh, yeah, for sure.
So we need to break down these tariff actions,
Mm-hmm.
understand the logic behind them based on this document, look at the immediate reactions and the potential for a domino effect of retaliation.
Okay.
Let's start right at the beginning, January 20th, Inauguration Day.
Okay.
The source makes it pretty clear where the president's head was at.
Yeah.
It does.
What does it say? The document highlights how central this idea of tariffs was right from the start of the term.
Uh-huh.
In his inaugural speech, President Trump didn't hold back, essentially promising to heavily tax goods coming in from other countries until those countries were eager to buy American products.
Yeah, it's a very direct and assertive stance for sure.
It is, yeah.
And the initial targets were our closest neighbors, Canada and Mexico, with a proposed 25% tariff right out of the gate. China was also signaled as a major focus down the line. That's a pretty bold opening move that sets the stage for everything that follows.
Yeah, for sure. And there's this mention in the source of this idea for an external revenue service. While it hasn't come to fruition yet, according to the document, the fact that it was even floated suggests a significant potential bolstering of the infrastructure needed to actually implement and collect these tariffs on a large scale.
Yeah, that's interesting.
Yeah.
Just a few days later, January 26th, we see the first real application of this strategy with Colombia.
Okay.
What triggered that?
The document details a specific situation where President Petro of Colombia refused to accept U.S. planes carrying deported migrants.
Okay, interesting.
The response from the U.S. administration was immediate, a 25% tariff imposed on all goods entering the U.S. from Colombia.
Wow, talk about a swift reaction.
Yeah.
And it wasn't a one-way street, at least initially, right?
Yeah, exactly right.
Colombia pushed back.
The source indicates an initial retaliatory move from Colombia. However, the situation de-escalated relatively quickly after Colombia agreed to accept the deported flights. What's fascinating here is how directly and rapidly the tariff threat was used as leverage, and how quickly things shifted once the initial issue was addressed. It shows how these trade tools can be intertwined with other international relations.
So these tariffs are kind of like a bargaining chip almost.
Yeah, exactly.
Then, jumping to February 1st, we see a much broader action with an executive order.
Yeah.
What did that order lay out?
So this was a significant escalation, no question.
Go ahead.
The executive order declared a national emergency related to immigration and drugs and used that as justification for imposing tariffs on a wide range of goods. Specifically, it announced a 10% tariff on all imports from China and a substantial 25% tariff on goods from both Mexico and Canada, with an effective date of February 4th.
Wow.
This was a major broadening of the tariff landscape.
And this was all framed under this national emergency. And you can imagine that our neighbors and one of our biggest trading partners weren't exactly thrilled about that, especially Canada and Mexico, considering the USMCA.
Yeah, the source underscores the immediate negative reactions and the strong hints of retaliation, particularly concerning the USMCA, the trade agreement between the United States, Mexico, and Canada that was already a renegotiated deal.
Right.
Threatening these kinds of tariffs so soon after that agreement was put in place really throws a wrench in those established trade relationships.
Yeah.
It raises questions about the stability and reliability of these agreements.
It's hard to imagine being a business owner or even as a consumer in those countries during this time, just not knowing what's going to happen next.
They are very uncertain times.
But then just a couple of days later, February 3rd, there's a bit of a reprieve, at least for Canada and Mexico.
Okay.
What prompted that pause?
So the document credits promises of increased cooperation on border security for this 30-day pause on the tariffs for Canada and Mexico. President Trump is quoted as calling this move reasonable, which is interesting when you consider the very aggressive tariff threats that had just been issued.
Yeah.
It suggests a potential strategy of using these threats as a negotiating tactic, a way to apply pressure to achieve other objectives.
So it's looking like the tariffs themselves might be as much about leverage as they are about pure trade policy.
Right.
Meanwhile, on February 4th, the tariffs on China did go into effect.
Right.
What was the immediate reaction from Beijing?
As expected, China responded swiftly. The 10% tariffs on their imports triggered immediate counter tariffs from China, targeting key U.S. export sectors.
Uh-huh.
The source specifically mentions tariffs on U.S. coal, gas, and oil.
Okay.
Beyond traditional tariffs, China also initiated an anti-monopoly probe into Google, signaling a potentially broader, more strategic retaliation that goes beyond just matching tariffs dollar for dollar.
So they're kind of playing hardball.
They're not backing down, that's for sure.
It feels like we're on a roller coaster with these trade announcements.
Yeah.
Just a week later, February 10th, the focus shifts to steel and aluminum tariffs, which had been in place previously.
Exactly.
What happened there?
The existing tariffs on steel were hiked to 25%, and aluminum tariffs were also raised to 25%, set to take effect on March 12th.
Okay.
The source includes President Trump's bold statement, America's going to be a steel fortress.
Wow. A steel fortress?
Yeah. While it's a powerful image, it also signals a clear priority on boosting domestic production in these key industries through significant trade barriers.
But building a steel fortress probably isn't cheap for everyone else, right?
That's right.
Steel and aluminum are fundamental components in so many things we buy.
That's a crucial point. Increased costs for essential raw materials like steel and aluminum inevitably get passed down the supply chain and ultimately impact the prices consumers pay for a vast array of goods, from cars and appliances to even the packaging our food comes in.
Right.
It's a hidden tax that can affect almost everyone.
Yeah, absolutely.
Economists often talk about this in terms of reduced consumer surplus, the benefit consumers get from paying less for a good than they're willing to.
Huh.
Tariffs can shrink that surplus.
Makes sense.
Yeah.
Then on February 13th, we hear about an idea that sounds like it could really shake things up: reciprocal tariffs.
Oh.
What's the basic concept there?
The idea behind reciprocal tariffs, as outlined, is essentially to mirror the tariff rates that other countries impose on U.S. goods.
Okay, so if
So if country X charges a 10% tariff on American products, the U.S. would then charge a 10% tariff on their products.
I see an eye for an eye.
Exactly. And the source notes the significant negative reactions from the economic community to this announcement. Many economists worry that this kind of tit-for-tat approach could very quickly spiral out of control, leading to a dramatic decrease in global trade as countries keep raising barriers against each other.
Right.
India and the European Union were specifically mentioned as potential targets under this policy.
So a lot of people were on edge, I imagine. This is a pretty major threat to global trade as we know it.
Yeah, it's a big deal.
Moving into late February and early March, we see some interesting materials being labeled as matters of national security. First, copper, and then lumber and timber.
These were certainly noteworthy developments. The February 25th executive order to study potential tariffs on copper, citing national security concerns, was surprising to many. Copper is used in a wide range of industries, and the link to direct military application isn't as immediately obvious as, say, specialized metals.
Right.
Then the March 1st order imposing tariffs on lumber and timber, again under the umbrella of national security and the need for wood for the military, also raised eyebrows. The rationale, as the source points out, creates a very direct connection between lumber imports and the country's defense capabilities.
I see.
It's a rather broad interpretation of national security.
Yeah, it's interesting how these everyday materials are suddenly being reframed through this lens of national security.
For sure.
It makes you wonder what could be next.
Yeah.
Then just a few days later, March 4th, those paused tariffs on Canada and Mexico are back, and the tariffs on China are doubled. This feels like a real escalation.
Absolutely. The reinstatement of the 25% tariffs on the majority of goods from Canada and Mexico, with a slightly lower 10% on Canadian energy, signaled a return to a more confrontational trade stance. Simultaneously, the doubling of tariffs on Chinese goods to 20% significantly heightened tensions with Beijing.
Okay.
As the source details, this triggered strong and immediate retaliatory measures. Canada announced tariffs on a staggering $100 billion worth of U.S. goods set to be implemented over the following weeks.
Wow.
Mexico also promised to respond in kind, and China targeted key U.S. agricultural exports like soybeans and pork, directly impacting American farmers. It's a classic example of how one trade action can quickly lead to a chain
Yeah,
reaction.
it's domino effect where
Exactly.
everyone ends up getting hit.
Right, you could almost see this as a trade version of a prisoner's dilemma, where individual actions, even if intended to be beneficial, lead to a worse outcome for everyone involved.
Yeah, it's a classic game theory scenario playing out on a global scale.
Yeah, exactly.
Interestingly, on March 5th, there was a brief pause in new tariffs, specifically for U.S. automakers.
Yes, the source mentions a 30-day reprieve on new tariffs for U.S. automakers importing vehicles from Mexico and Canada.
Okay.
This suggests a potential recognition within the administration of the significant interconnectedness of the North American auto industry and the potential for these tariffs to harm domestic manufacturers as well as those importing vehicles. It highlights the complexity of these trade relationships and how tariffs can have unintended consequences within your own economy.
Right, so it's not as simple as just saying, we're going to put tariffs on everything.
Exactly.
And then just a day later, another pause for Canada and Mexico more broadly, again, citing progress on border security. It really does feel like a constant state of uncertainty for businesses.
Yeah, the source emphasizes this ongoing volatility. The further delay of most tariffs on goods from Canada and Mexico for another month, attributed to progress on border security, underscores the link between trade policy and other political objectives. In response, Canada did suspend its second planned wave of retaliatory tariffs, indicating a willingness to de-escalate if the pressure from the U.S. is eased even temporarily.
But China doesn't seem to be easing up. On March 10th, they announced even more retaliatory tariffs.
That's right. China expanded its tariffs on U.S. agricultural products, imposing a 15% levy on key exports, like chicken, pork, soybeans, and beef.
Okay, hitting us where it hurts.
And the source notes the subsequent dip in the stock market, directly linking these trade actions to financial market performance and investor confidence.
Uh-huh.
This shows how these trade disputes can have tangible financial repercussions beyond just the cost of goods.
So it's not just about the price of soybeans, it's about the entire stock market reacting to this uncertainty.
Right.
Then came March 12th, the day those increased steel and aluminum tariffs fully took effect. And the European Union made it clear they weren't going to just stand by.
The implementation of the 25% tariffs on steel and aluminum went ahead as planned. The European Union's response was significant, announcing plans to impose taxes on $28 billion worth of U.S. goods, with specific examples like iconic American products like jeans and bourbon mentioned in the source.
So they're really hitting us where it hurts.
Yeah.
And the potential for tariffs on alcohol didn't stop there. The very next day, March 13th, we heard about wine and spirits. That sounded particularly aggressive.
It was President Trump threatened a massive 200% tariff on European wine and spirits if the EU moved forward with taxing American whiskey as part of their retaliation.
Wow, 200%.
Yeah, this kind of very specific and high percentage threat illustrates the potential for these trade disputes to target very specific and often politically sensitive industries and products.
Right.
Imagine the impact on the wine and spirits market if such a tariff were implemented.
Yeah, it would be huge.
It would.
A lot of businesses would be affected for sure.
Oh, absolutely.
Bringing us closer today, we see Venezuela entering the picture on March 24th and 26th, along with a more general move on imported cars.
Yes. The measures concerning Venezuela were multifaceted. First, tariffs of 25% were announced on anyone purchasing Venezuelan oil or gas, clearly aimed at putting pressure on the Venezuelan government by restricting its revenue streams.
Huh?
Additionally, new tariffs were imposed directly on Venezuela itself, set to take effect in early April. The source rightly points out that this could have indirect effects on the U.S. as well, given our own, albeit limited, imports of Venezuelan oil.
Right.
Then just 2 days later, the announcement of a 25% tariff on imported cars accompanied by the Buy American slogan signals a potentially significant reshaping of the automotive market with likely consequences for both consumers and international car manufacturers. This could very well lead to higher prices and less choice for car buyers in the U.S.
It's a lot of uncertainty and potential disruption.
Yeah, for sure.
So looking at the big picture painted by this document, what are the key economic takeaways that really stand out?
So the source itself highlights several major concerns.
Okay.
Firstly, there's significant uncertainty for businesses.
Right.
The constant threat and implementation of new tariffs make it incredibly difficult for companies to plan for the future, manage their supply chains, and make investment decisions. This uncertainty can stifle economic growth.
Yeah, absolutely.
Secondly, the likelihood of rising prices for consumers is very real. As the cost of imported goods increases due to tariffs, those costs tend to be passed on to the people buying those goods.
Uh-huh.
Finally, the escalating cycle of retaliatory measures raises the serious risk of a wider global trade conflict, which could disrupt international trade flows and potentially slow down the global economy as a whole.
So essentially, we have a situation where businesses are struggling to plan, consumers are facing higher prices, and the global economy is at risk of a major slowdown.
Exactly. It's a very precarious situation.
It's a complex and rapidly evolving situation. And as this snapshot up to March 27th, 2025 shows, it's anything but stable.
Absolutely. What we're seeing is a very dynamic and potentially volatile international trade environment where policies can shift quickly, creating a lot of instability for businesses and consumers worldwide.
So as you've listened to this, think about how these kinds of trade policies might affect your own life, from the things you buy every day to the broader economic landscape.
Right.
These decisions made on an international level have very real consequences right here at home.
And perhaps the most important thing to consider, given the sheer volume of tariff actions, threats, and even temporary pauses we've seen in just these past couple of months, is what this approach to trade policy really tells us about the future predictability and stability of international economic relationships.
Yeah, it's a really good point.
It's definitely something worth pondering and maybe looking into more as these events continue to unfold.
It certainly is. Well, thanks for breaking this all down for us. It's been really insightful.
Yeah, no problem. Happy to help.
For everyone listening, we'll be back soon with another deep dive into a different topic.
Sounds good.
Until then, stay informed and stay engaged.
Absolutely.
Thanks for listening.
See you next time.